I'm going to leave on the table everything which is obvious, core and prime. Across the sectors, probably I would do a lot in retail because there's simply more opportunities to buy interesting assets for good yields. Quite an overweight in logistics, we talked about that. And in the office sector, I'd probably go for things which have some sort of development angle to it.
Okay, good, thank you. Karim?
Well,
you don't need to necessarily stick with Union's view, so you're allowed to go slightly further afield than that.
Well, in that case, I stick with Unions. Well, I guess it would be a diversified Germany portfolio, very much bottom up by the quality of properties. So it shall be retail, shall be hotel. Be careful with office, and some logistics.
And are they, in terms of the budget hotel kind of trend that you saw, is that in specific cities? Is that only in the top 7 cities, or?
No, it's wider.
It's wider?
It's wider. Let's say 20, 25 cities.
Okay, good, thank you. Saul?
So I would probably put half of it in financial institution group lending opportunities to sort of real estate private equity style investing, and take the view that the lending spread that will ultimately come down for sort of mezzanine will you can capture a lot of that potential if you sort of are invested in banks, insurance companies, or sort of smaller orphan things that are coming out of the banks that are scaling down. So that'd be a portion of it. It has to be real estate related since that's what we do. And then the other part, I would probably continue to look at some redevelopments. I think for the first time we're really seeing in what are perceived to be expensive markets the opportunity to redevelop office into residential, which had not existed, at least in my 10 years in Germany, until the last couple of years. So that's something we've seen elsewhere in the world, and for whatever reason, maybe I just wasn't aware of it, but I really hadn't seen it in Germany until quite recently. So I'd sort of pick those two sectors now.
So this is office that really is no longer fit for purpose.
Yeah.
You could now.
Yeah, sometimes it's older stuff, but just sort of conversion as to the extent that residential remains interesting outside of the actuarially based residential product. So sort of that middle to higher end conversion in inner city locations, we're starting to see a bit more of that conversion potential that we had not seen previously, or I hadn't really seen it. So those two sectors.
Good, thank you. Alex?
I would stay in the 7 main cities in Germany. The split will probably be 40% office, 60% residential. Office towards healthcare. I think that's obviously a growth market in Germany. And on the residential side, move into development. Not so much conversion, sort of a financing issue. It's very difficult, very expensive to convert office into residential across the board. I mean, there are obviously individual buildings that make it work, but just making more nicer apartments out of the existing stock. I think that's where I would invest my money.
Okay, great, thank you. Kai?
Well, it's always a matter of risk-return expectations, or what you really want to take. So on one side, I can agree on optimistic investments being in a different sector. From my point of view, to split the 500 in 200 million for regional office markets would be interesting. That provides stability, liquidity, and growth. And on the other side, I would also go for healthcare for 150 million healthcare investments, and the other 150 million in residential, partly in existing portfolios and in some parts on repositioning assets, not like in the way like the opportunistic investment, like transferring office buildings to residential, but taking on the objects which are in quite good locations, not in the prime cities, and really putting in some refurbishment, and not to that scale that you really totally demolish them, or you put it from an office to residential, but really investing some cash in the properties, and by that you also get a very stable and interesting yield return.